Welcome back, ladies and gentlemen. After that innovation showcase of the top 6 AI and big data focused companies from across Asia and Europe, we're now going to jump into a very interesting topic, which is close to my heart personally, which is looking at how AI and big data can impact trading and risk management. I will now hand over to our moderator for the day, Mr. Neil Tan, who has had an extensive experience in banking and wealth management. Neil is also the co-chair of the FinTech Association of Hong Kong's WealthTech Committee. Thank you, everybody, for joining us, and over to you, Neil.
Thanks a lot, Mishra. I really appreciate it. This panel, what we're focused in on is the role of AI and also big data in the context of risk management, really focused in on trading and also investment management. We have an all-star lineup. Thank you to Invest Hong Kong in terms of sponsoring this particular panel. Maybe we'll start it off with a few introductions. Maybe Maayana, if we can kick it off with yourself.
Sorry. I'm the CEO of Hedgetech Financial Engineering. We are vendors of risk management platforms from Israel.
Great. Thanks. How about King? If you can give a quick introduction of yourself.
Hello everyone, King Leung, head of FinTech Invest Hong Kong. So basically we are here to connect the resources across the Hong Kong ecosystem, both the private sector and public sector, including connecting with potential clients in the financial services sector, as well as the investors. So come talk to us offline in case you are interested. Thank you.
Great, thank you. Rajeev, I know you're over there in Canada, so.
Hi, thanks, Neil. Yeah, this is Rajeev Chib. I'm with Citibank and I'm the CEO for investor sales in Asia. And we've been involved quite heavily, particularly in the client franchise, utilizing machine learning, robotics, within the sort of AI umbrella.
Fantastic. And Abhinav?
Hello, everyone. This is Abhinav Mishra. I'm co-founder and CEO of Value3. We are an AI platform working with asset management and investment banking universe across ASEAN, India, and European markets, leveraging AI and NLP techniques and big data for automated credit ratings and portfolio management. Thank you.
Okay, great. Thank you. So we're just going to go straight into the questions because we're on a pretty tight time frame. I think use of AI in trading and capital markets has been around for years, right? So, we've got a number of different examples like Millennium Capital and so forth. So how has the industry use of AI evolved over time? What are some of the new use cases inside of the marketplace that you guys are seeing? Maybe I can start off with Maayana, if you'd like to answer that question.
Okay, AI actually penetrated most of the areas in our lives. Can you hear me?
Can you go a little closer to the microphone?
AI penetrated most areas in our lives, but I would like to concentrate on what is missing and not what exists. And what is missing in our area is treating operational complexity. Now, with financial analysis, most of the resources, both manpower and money, are devoted to dealing with data collection, data manipulation, checking data integrity, classification, and so on. So this part takes most of the resources, and therefore it is important to reduce the complexity of dealing with this part. Now, it is recognized both by regulators and by market that dealing with data in our area is not enough. It's catastrophic, and it needs to change, and it needs to develop, and it needs to automate. Just yesterday, I received a survey by Premier that confirms this fact. Another thing that is recognized is that maybe data solutions should be adjusted to the specific need. It's very nice to have a very flexible solution, very general solution, but once you deal with such a solution, it's also, sometimes it's very complex to solve your own problems. And it's nice to have a built-in tools that solve your solutions, your problems. Now, okay. So therefore, we might want to have a different solution for data in insurance data, a different solution for market risk management. Now we are, as vendors of risk management, we are close to our customers, we see their problems, and we develop solutions for the problems, and we also develop solutions for this part. In our area, standard implementation of would take long months, many times much more than a year. And with our solution that uses no-code integration tools, we come to like 25% of the time implementation, which is kind of nice. Currently, what we do that using expert-driven AI, or another terminology for that is rule-based AI, meaning that what we do is we use our own expertise, our own experience in order to build models and algorithms, and we do not use the standard algorithms of the AI. And nevertheless, we do research now in order to incorporate also this standard algorithmics. But this, of course, after overcoming the challenges in this area, which some of them are not enough data.
Great. Rajeev, do you have a few sort of insights on this side?
Yeah, no, thanks, Neil. I mean, just kind of in line with what Maayana was saying is, if I look 5-6 years ago, process automation was looking at processes that had very less variation. So automation was being used to streamline, using these rule-based engines. So you sort of fast forward to 2017 and 18 within the market space, we sort of looked at more autonomics, machine learning, where the processes had multiple variations and there was some cognitive decision making that was required. So machines were applying algos, and I think the difference there is also data was more real time. And if you look at the current state today and sort of as we move forward, you're looking at much more sort of cognitive and AI, where the process is highly complex, unstructured data, cross jurisdictions, there's high level of human intervention as well. So basically, in a nutshell, in the last 7-8 years, there's been an increased complexity. Other areas, I think, in terms of sort of advancements we've seen is in the natural language processing and also video analytics. That's sort of another area. Now, in terms of applications where we've seen, within the market space, what I would say is it's been very focused around, 3 areas, really: people, process, and data. Specifically within the client business, we're looking at how to be really aligned to the overall investor and client experience. So the entire supply chain, so from pre-trade activities to all the way to post-trade, where AI and machine learning has actually come into place. So, for example, with the type of products that we deal with certain leverage products, credit memos, for the more plain vanilla type of products, we've utilized tools where it used to take analysts several days to produce these memos, now really takes a couple of hours. Another area is legal documentation, where the type of products we deal with are bilateral in nature. So ISDA agreements, CSA agreements, again, for the less leveraged, we've used technology and innovation to reduce the turnaround time to send out, draft documentation. Other areas also include, confirmations of transactions using robotics. You don't really need human beings to actually go in and, bring up Outlook, attach a document. A lot of that is being done through some robotics and machine learning as well. One interesting, example was through the pandemic, particularly some of the smaller firms where, we actually were using wet ink to sign documentations. We had to find a more innovative way of electronic signatures. So we were able to, partner with a few vendors around that space, which sort of supercharged, that initiative, which completely did away with wet ink. So definitely through that entire supply chain, we've been able to look at both pre-trade, ongoing life cycle management of our activities, as well as post-trade, where AI and data analytics has been very powerful.
Great, thank you. Yeah, I mean the entire life cycle, pre, during, post, is critical inside of the applications, right? Next question is, how is the buy side and also the sell side different? Maybe Abhinav, do you want to give that a shot?
Sure, thanks, Neil. So I think as mentioned by Maayana and Rajeev, right? So first of all, the whole approach towards AI has gone from instead of being very incremental or as a top-up value-add approach to a more integrated approach. From a buy side or asset allocation, we are now using AI across the streams of asset allocation, portfolio selection to portfolio construction, and then all the way to risk monitoring and decision-making tools. So across the spectrum of the life cycle of portfolio management, AI is now very active. About 7-8 years ago, I was part of this JP Morgan team that used to work with a lot of alternative data sets, and we used to basically deal with more than hundreds of data sets that we were kind of trying to understand and make sense of. And it was highly complicated to then bring in all these new data sets into our in-house ecosystem and integrate it well to make the decisions. The advances in the AI as a technology, and specifically into machine learning and natural language processing, and the availability of the alternative data over the last year, especially the advances that have been made in text-based analysis, have made it possible to really embed all this information and make both generalized as well as very niche contextualized applications for machine learning and NLP. So for example, what we are doing over here is we are using machine learning and NLP to real-time understand the text-based data, contextualize it, translate it, and then derive early warning indicators for the asset managers and hedge funds and banks that are working with us, whether for a lending portfolio or for an asset management portfolio. Particularly if you look at in Europe or in overall Asia Pacific market, including ASEAN, India, China, and then the broader Asia Pacific, if you leave out the large caps, the coverage seems to be very, very limited. Now, AI is enabling us to really provide coverage of assets that were historically never covered, and thereby never part of the asset management portfolios, or in terms of MSMEs, not part of the lending portfolios of large banks. Now, leveraging these technologies, it has really become possible on the buy side. Now, talking about on the sell side, right? So sell side is in the business of producing a lot of industry research and providing that to their investor base, or in case of wealth management, their HNI clients. You have a lot of work now happening in the passive investment area, which has become equally important as the active investment. We are leveraging NLP techniques to really be able to digest all the data, which is today the data, the amount of data that we have, petabytes and zettabytes of data, it is just not humanly possible to comprehend all of that. So the technology is not only required, but a necessity today. We cannot do it without it. And using that, we are able to leverage and use language generation techniques to produce automated reports, not only analyze data, and this can be then used by, is being used by sell side to offer research services and increasingly sell side products to their clients as well. So this has become quite mainstream in the past 2-3 years, as I see, than say 5 years plus ago, when this was more of an incremental value as a side project happening in silos.
Right. Yeah, I mean, 90+% of the data has been generated within the last 5 years, right? I mean,
absolutely.
And, hence the need for all of this automation and AI and machine learning and so forth. Rajeev, you've got a fair amount of exposure inside of the sell and buy side. So do you have a few, insights on that front?
Yeah, no, I think, Abhinav definitely covered a lot of the key points there. I guess the specific area that I'm seeing, again, from the lens of the sell side and engaging with our investor clients, is actually an area around ESG, especially specific to climate risk, for example. That's really at the forefront on some of the discussions with the investor clients, where there has been an appetite and enthusiasm around sharpening their focus in terms of what exactly is the financial impact of, for example, climate change. And, there seems to be a need of more transparency around data and insight, whether, their capital is being aligned to the more longer term goal of like a sustainable green economy, or whether it's society. In fact, GARP just produced a 2021 survey, indicating that particularly in climate risk management, the chief risk officer remains the senior most executive that's responsible for climate risk management. So really, like looking at what some of the buy side is actually indicating in terms of this space is, they are definitely looking, and it's quite aligned to some of the AI efforts, is a shift to a more sort of quantitative analysis to assess climate risk. Another area is like a really intensification by some of the regulators on supervisory activity on climate risk. So, for example, there's more formal expectations on climate risk stress testing, and how you can use sort of some of the data that's available there. And then also, I mean, at the end of the day, the reliability of certain models, the availability of the certain models where, without good models, I mean, as part of this survey, 94% of the respondents believe that climate risks have not been fully incorporated into market prices. So I think that's where there's an opportunity for certain technologies, to help that cause. And Abhinav mentioned NLP, so the natural language processing. I think another area to mention is it's being used also to supplement gaps in disclosure, and to assess what a company is saying versus what they're actually doing. So are they greenwashing versus social washing? So some of these NLP techniques are being used in that space as well.
Right. Yeah, I think
just Neil, I would like to make one point to top on Rajeev. So obviously in ESG space, also increasingly a lot of focus is on quantitative assessment than historically what used to be very qualitative scorecard-based techniques. Whether you look at the SDGR regulation that has come into flow in Europe, or the science-based targets, which is the focus now. So it is very important to look at quantitative data in this space, and there's a scarcity of ESG data, while there's a lot of capital that is flowing into this space. So this is again an area where a lot of the ESG relevant data and controversies that need to be monitored by both buy side and sell side are currently embedded in unstructured data. And as Rajeev said, so natural language processing is one of the leading technologies that is working in this space. In fact, we are working with one of the companies called CredQuant in Singapore. They recently did a showcase at IMA's presentation, and they're leveraging this technology to do ESG assessment on companies across ASEAN markets. So this is again a game-changing play that is happening in the ESG space, and would require more adoption.
Right, great, thank you. With the high automation that's going around inside of trading these days, how do risk managers leverage AI, in terms of risk management? Are there any specific use cases in trading supervision? Maybe I can ask Maayana if you can respond to that.
Okay, thank you. Well, AI is very strong, very efficient, very cost reducing.
Sorry, can you, sorry. Can you come?
Okay, there's a broad collection of the fields in risk management. And AI is very efficient, very cost reducing in many such areas, depending on the type of problems. So my colleagues mentioned some of them, like fraud detection, credit rating, risk profile, trading rules. With all these, AI is very efficient and very cost reducing. But I would like to refer to two topics close to my heart in market risk management. One of them I mentioned before, which is the operations approach, operation complexity. And the other one is market risk management measures. Now, I would like to refer to the challenges of solving the calculation of this measure. So it comes from several sources. One of them is the nature of the relevant financial institution, and I'm referring to banks and insurance companies. So, so most of them still have legacy systems which don't have very much power in calculation. They have low computation power. They have incomplete data set. It's difficult to extract this data. And also, frankly, they are not willing to share their data unless regulators force them to do that. In addition, there are many upcoming regulation, like for the banks you have Basel III and FRTB, and banks are very busy for many long months to implement this regulation, and they will be busy depending on the country. They will be busy in this implementation still for at least the next 1 or 2 years. And they are investing a lot of resources in doing this, given that they do not have the resources to adopt a new methodology. In addition, it's very typical for both banks and insurance companies to adopt the concept of risk management, which is close to the concept implied by the regulation. So maybe they change a few parameters here and there, but the general concept is the same. Given that, and given the fact that they are just now within the next 2 years adopting a new regulation, new model, it's difficult to believe that they will go for a new methodology in the next few years, unfortunately. Another source of problems is a very strict requirement, which is explanatory ability. Risk managers risk teams are dealing most of the time with data treatment, and then just with the push of the button, they get the results of the risk analysis, and and then they are busy a long time with the explanation of this data. And if you have a black box, you cannot do it. Now, this is internal requirement from one side, and it is a strict requirement from the regulator side. I mean, everything you need to explain. All the time they are busy explaining and explaining. And this clearly gives advantage to rule-based AI, in which humans define the models, and therefore they can explain it for the meantime. Another problem with AI in risk management, market risk management measures, is the quality of the data. We are dealing with a relatively short data series. These series are not stable. The correlation between factors is not is very volatile. In short, the data quality is not very satisfactory. Last but not least, let's look at the AI nature. You adopt one algo and you get results. You adopt another algo, you get different results. This is problematic for regulation. Also, market risk measures are very complex. They depend on many parameters. So you have many parameters on one hand. On the other hand, you have short series of data, and this can cause the overfitting, meaning bias. So I would like to summarize that AI adds a lot of value to risk management on in many areas. We still have the problems with measures of market risk, given the challenges that I said before. In the meantime, probably rule-based AI will rule the area.
Sure. How about yourself, Rajeev? What are your thoughts in terms of the key learnings inside of risk management for trading supervision?
Yeah, look, I think Maayana talked about the market risk management side. I guess I can comment a little bit on the credit risk management as well, where we've utilized and seen AI, where sort of rule-based technology, for example, putting in early warning indicators and utilizing some predictive analytics across a series of credit metrics, which gives risk and relationship managers some tools to have meaningful dialogues with their investor clients, including like balance sheet allocation, risk appetite, and essentially product distribution as well, and the strategies around product distribution. So having really these early warning indicators where when you've set certain limits for clients and you're hitting 70-75%, it sort of warns you using these tools to actually prompt the relationship manager or the risk manager to have that discussion. Really is where we've seen some advancement in this space. The other area I would say just around supervision, definitely there's been some advanced analytics approach to monitoring conduct risk, for example. And I think some of the areas that we've focused around is, for example, employee patterns. So simple things like swiping data or swiping dates, printing patterns, email patterns. That seems to be an area as well, around employee patterns. And then trade surveillance data. So this could be when products are being traded, so the timing of them, comparing them against benchmark data. Customer complaint patterns associated with specific individuals or specific teams, is another area. And then performance management around compensation, whether that's individual compensation, whether that's also, sort of within the realm of gifts and entertainment for clients, that's another space as well. And then I guess just broadly product and customer level sales data. So, have products been activated? Are there any sort of abnormal closing rates and suspicious funding deals around it? So those are kind of examples where from an approach to monitoring conduct risk and supervision, that's been an area of focus as well.
Great, thank you so much. Maybe we can transition over to another topic that is close to the ecosystems. So what are some of the key challenges in choosing an AI technology solution provider? So looking at different vendors and how are they being assessed and so forth. Maybe I can ask King to respond to that.
Thank you, Neil. Yes, I think for a lot of the discussions that we had from the speakers today, we're talking about the more sort of savvy end of the market with the big banks in particular. But then for us in the government, we need to sort of help to foster the development of the broader societal kind of impact. So therefore, I'm talking about the mid-size, the banks and the insurance company, like securities firms. Many of these guys would love to have the kind of tools that the speakers mentioned. It's just that oftentimes the pricing are really pricing for the tier 1 banks. So these guys are totally priced out, right? So I guess in a way, while there are a number of sort of good attributes, typically from the sort of technology side that some of the fintechs are pitching to these companies. But first of all, typically those pitches are over the head of most of these mid-sized players. They just simply don't understand all these savvy technology. Now, at the same time, they are really more looking at the number of logos that the fintechs have on their PowerPoints rather than the underlying technology. And also pricing is something that is something is very sensitive to the mid-sized players. So that's why for us, we oftentimes work with the fintechs to understand the market entry strategy in Hong Kong, in which we do have access to many of the local clients for the WealthTech players. And also sometimes we even ask questions such as the pricing strategy and what kind of I guess differentiation that they have and how would they pitch themselves. And if the pitch is too technical focus, we probably advise them to steer to another direction that is more practical, that is more understandable.
Yeah, so more focused on, how to actually commercialize or look at the different results. Maybe that's more of the benchmark, and then that's maybe the pricing model is the results or something along those lines.
Correct.
Cool. Maybe I can ask Abhinav what are his views, because obviously, coming from the startup perspective, I'm sure you've dealt with a number of different large players. So.
No, indeed, I think, and King is right in terms of the pricing factor, right? And in fact, we as a startup, our competitors in the space of if you're going for the large banks and asset managers as clients, the price again becomes a factor, right, amongst other things. And even big banks like to get the products at quite cheap cost, so that doesn't change with the size. But nonetheless, I think the other important factors, of course, other than price, becomes ease of integration. So how easy it is to integrate your product. Is it leveraging the open API ecosystem where you can plug and play, or you have this giant software which needs to now either sit as is or it doesn't work with other ecosystems. So I think today, while we build AI solutions, the infrastructure around it needs to cater to really this whole technology architecture, which is API enabled, where you can do upstream as well as downstream integrations. Especially if you're working with large corporations, it becomes very important because they most likely have already invested into existing infrastructure in-house, have large systems, databases, and teams working. You cannot go in and say, look, now I have a new way of doing things. You get rid of everything that you have, and I will give you a rocket ship. So that normally doesn't work. So what does work is if you have, and over time, that may very well happen, but that choice have to be, let the client experience it and then go through that journey. But the solution, ease of integration becomes a key requirement. Second, close to that is scalability. Is this scalable? For mid-sized player or the large player, what they're looking for is, okay, can this product or underlying technology be used beyond the day one use case for which I get in? Can I use this to get into new markets, new products? Give it to other teams. How many of my departments or people can leverage the technology to make the best out of the best value out of the cost that they're incurring? So those obviously become very important. And then the other important topic that also King touched upon is complexity, right? Till date, while there's a lot of talk around AI, the average understanding on the nitty-gritties and technicalities of AI, whether we talk about very simple prediction models, and in some cases, ML models are nothing but statistical, models, which people are used to use, right? So from things like principal component analysis, regression, and so on, random forest is nothing new to those who are in the space of risk modeling, pricing strategies, etc. AI obviously gives you tools and new language. It's like a new language to do the same thing in a more scalable, more faster, more cheaper way through cloud infrastructure that we have today as well. What's important is while you have all the underlying complexity in building the AI solution, its value proposition should be very easy to understand for the end client. Right. So it should be very clear, I do X, I get Y. If, between X and Y to explain that you have to talk 2 pages of white paper, then, half of the clients are going to go halfway through there. So those aspects, I think, complexity, ease of explanation, explainability, I think Maayana touched upon that as part of market risk context, pricing, ease of integration, scalability.
Right. Awesome. Great. Thanks. Another question is, with all the new AI and analytics applications, how do you check the integrity of results? How do you verify those different things? Maybe Maayana, if you want to take that question.
Well,
it's a monster of a question, I know. So it's like, where do I begin, kind of thing.
As I said previously, I just got yesterday the result of the survey where it is said that one of the most important issues in the data dealing is checking the integrity of the results, or integrity of the data. And when we are speaking about the data integrity, you have the integrity of the data includes, in my area, includes instrument data, it includes position data, and it includes market data. For example, with market data, it happened in the past several times that our customers use data with the holes in the data, and therefore they got very low risk. It's very nice, and they didn't understand where it comes from. Our customers use data, sometimes the quality data, and sometimes they use data from other sources, and they have to put them together. And the less qualitative data needs to be checked. And the ways to check it is by statistical manners. I mean, looking at correlations over time, standard deviations, and more. Regarding instrument data, well, we have some ways of checking it. It's very complicated. The first thing you need to do when you get to such data is just classify the data. And this sounds simple, but it is not at all. I mean, you look at a specific line in your data. Is it a bond? Is it an option? Is it whatever? So there are a lot of issues you need to classify. You need to classify your instruments, and then you need to manipulate the parameters, and after that you get a model, and you have sometimes you have multiple models. You need model for regulation, you need model for internal use, and the question is whether the resulting data that after manipulation makes sense. I mean, you can compare, for example, you can look at the present value implied by your platform and compare it to the book value given from outside. You can compare the implied standard deviation of an option implied in your platform and compare it to the implied standard deviation given from an outside source. So there are many ways of doing it, and we put a lot of effort in integrating it in our system.
Right. Thank you. That actually brings up another question: is, where do WealthTech startups and so forth look for algo trading talent? I think that sort of capability set is somewhat challenging to find inside of the marketplace. And if there's a scarcer resource, I think this is it, right? Maybe I can ask King to respond to that.
Yes, well, this is definitely a high priority item for us. And we work very closely with the community. And one of the groups that we work with is actually an NGO called ACA, Algo Challenge Association. It's a Hong Kong-based group. Essentially, I think the background for them is that there's a bunch of family offices that are very much into algo trading. So they basically build their own models and then manage their own wealth. And after a while, they decided that, well, they are having a hard time to find the talent to help them to build out all these models. And they decided to set up an association and run a competition. So last year during COVID, they launched it for the first year. And they have like massive response from the students across all the major universities in Hong Kong. And in fact, as one of the hooks that they had for incentivizing the students to participate, they have a bunch of other asset managers. Those are the friends of theirs to basically offer opportunity to hire these students. So naturally, the students who won this best algo design, best performance, and so on, the winning teams, they all got job offers afterwards. Wow. Yeah, so which is fantastic. So that's why for us, we are very much supportive of this initiative that we think is a good thing. And right now we are working with this group to extend out the invitation to universities overseas. They are known for having strong finance backgrounds to invite them to participate. So with that, hopefully we can reach out to more talents internationally in this algo space.
Right.
So this is just one examples, yeah, that we feel that it's important for us to expand the talent base.
Right. Yeah, I think that's key. I mean, in terms of building out the talent base, also the ecosystem that they can actually assimilate into and transition into professional life. That's fantastic. One more question is, how are regulators responding to the increased use of AI and big data? And, are they pretty well placed to supervise and regulate this? Maybe I'll ask Abhinav if you can respond to that.
Yeah, sure. I think two of the things that we just touched upon, by King and Maayana are at the top of the agenda for regulators, right? One is the kind of data that is being used, right? So in modeling, if you give in some data, some output would come out, right? But then the garbage in is garbage out. So there's a lot of focus on the quality of data, of course, and the transparency of the model, right? So for whether you're building a prediction engine or you're building, some kind of an algo to do trading, or using natural language processing, you have to showcase the predictability of your model, discriminatory power of your model, and the stability of your model, that it does something consistently, accurately, and precisely over time. So that is one agenda. So transparency, and Singapore MAS has come up with the Fiat principles for fair use of AI, and likewise other regulators are also coming up with the same. So that is one aspect. The other aspect is talent. So regulators are also worried that AI-led automation should not lead to job loss, and how the talent is being developed and skills are being embedded, through the ecosystem, through educational institutes, also through reskilling within the corporates. So those two agendas are at the top of the regulators' mind when it comes to AI. Obviously, as with other things, technology has put this question out there, and regulators are catching up. New regulations are right now. I think we are still coming up with new guidelines, and soon, but you would have model testing, back testing related requirements from regulator perspective as well, and which is overall good for the ecosystem. It will come out with more mature, more reliable products in the market that customers, both MSMEs, retail, and large corporates, would be more comfortable using. I'll stop at that in the interest of time. Thank you so much.
Yeah, I think we're running up. No, really appreciate it. Thank you so much to all the speakers on the panel. Great, discussion. I think there's obviously so much more to learn from this area. I really appreciate it. The audience, feel free to contact our speakers through LinkedIn. Thanks a lot for Invest Hong Kong in sponsoring the panel, and I hand it back over to Mishra. Thanks.
Thank you so much, Neil. The great moderation for this panel. Very important theme, as I said, as we pick up more AI and risk in trading management. I want to thank all the panelists for joining us, and once again thank Invest Hong Kong for their tremendous support throughout the existence of the virtual FinTech Fair. So thank you, everybody. Next, we'll move on to our panel very soon in 5 minutes' time. So the audience, please stay tuned, and we will be back on main stage very soon. So thank you to the panelists, and I'll see you soon.
Thank you.
Bye-bye.
Thank you.
Bye-bye.
Bye.